Good morning, everyone, and welcome to my little SPX daily plan. Quick review of last week, and in a way, there's nothing to review. In a way, there's a lot to review. 6,800 to 6,900 all week. That's actually been the range we've been in for the last 10 days. If we look at the chart here. Okay, let's talk quickly about Friday. And Friday was one of those days where we had, let me find Friday on the thing here. Friday was one of those days where we had calls sold above positive gamma right above us after making pretty much an all-time high. A couple of days in a row we were flirting with and finally breaking 6,900 and pulling back. And whatever the catalyst was, and there's always a catalyst or often a catalyst in one direction or another, whatever the catalyst was, Broadcom earnings weren't AI enough, or the AI trade with Oracle, whatever the catalyst was, doesn't really matter. Price is the catalyst. And the catalyst was we went down on Friday. We broke some key levels and there was negative gamma beneath us. We stalled at 6850 for a little while in here, the 6850 area. So we kind of went straight down through negative gamma zone, sliced through all this stuff here. And we managed to bounce around the 6850, 60 area for a while. A fund came in the morning and sold 6850, 6845, put credit spreads, pretty big, I don't know, 8,000, 10,000, pretty big trade. And that seemed to hold us for a while. And then, of course, we broke under it. And then we kind of came back to it. And somewhere around here, they rug pulled. The fund bought back their put credit spread at a loss, got out of Dodge, removed that whole cluster there that could have been sticky, could have been support, could have been an inflection of some sort, and then it was down, goes crazy the rest of the way. We undercut. There was some stuff at 6810. We undercut that. Almost bottom tick 6,800 and kind of bounced. And then in the overnight session, we kind of, now we're back at 6,850-ish, round number, kind of almost proving to me that a lot of that was just mechanical structural trading. VIX didn't act like the way the index acted. I put a note in my Discord, maybe I'll pull it up. If we look at the VIX decomposition index, most of the move in the VIX yesterday on Friday was the sticky strike. The at the money to 40 delta, most of the move was on the surface. The tails actually went down. So it wasn't like people were buying crash protection. It was more trading bullshit, technical term, of people hedging near where we are, like 6,800 or 67, 75-ish, where the 250 DMAs are. It wasn't some big rush to protection. And so given that, well, this rebound to 6850-ish pivot, where we've been pivoting for 15 days or 10 days since Thanksgiving, when we had that initial gap that the TA people insist we fill, is where we are. Could pretty much take the trading plan of almost every day the last 2 weeks almost, tweak it a little bit for which way the inflection is, and that's where we are again. So this week we have a little bit of alphabet soup. We have NFP and CPI and PCE. So we have the last of the numbers that might matter. Even though I think pretty much the market's made up its mind on what the Fed's going to do. So unless the numbers really shift the narrative somewhat, there might be some, vol getting bid because of the numbers. So VIX might stay a little elevated. We can consider 16 pretty much the floor, 15 and a half, and 17 and a half, kind of a top on normal nervousness. If we break above 17 and a half and stay there for more than a day, then things shift. And we may get into the vol space in a little more detail shortly. Let's quick look at the options depth. Okay, I see New York manufacturing prices, whatever. I don't really care, and the market doesn't really care, so no one cares. Let's take a quick look over here. So here's the options depth. Once again, reminder to the right is market makers long gamma, mean reverting trade opposite the direction of the move, but that works both ways. So if we go up and then they sell, but then if we go down, then they buy. Not here though, we'll talk about that in a minute. So in this zone where we're in right now, 68.50 to 68.75, nice 25-point zone. Round numbers, make your life nice and easy. As we go down toward this area, kind of a bounce support, but as we move away, we get pulled back if this weren't here. However, we have this ladder here, so this ladder tends to pull us up. This pushes us down. We have this little guy right here at 68.60. So we have a perfect little triangle here to here to here to here to here, 50 to 75 zone where we can play around. Now, these numbers aren't that big. It's 1,000 contracts, 700 contracts, about 1,000 on top. So these numbers aren't huge. So this can change during the day enough to kind of change the landscape. And above 75, if we kind of get moving, well, 68.90 is kind of where the next spot would be. And then the whole 68.90 to 69.05 is potential stall areas. But again, these whole numbers aren't that big, but that's the roadmap. And it kind of is confluent with TA where the levels are anyway. So it's not really a big shocker here. Here's what it's important to keep our eyes on from my point of view. If we break 40, 35, the 50, 35 area, so we closed at 27. So if we're red on the day or almost red on the day, then we enter this minus Gex ladder down to a big ass 6,800 negative gamma target, get pulled to that. On the other hand, if we stay above, and the longer we stay above, these decay up, and that provides buying, more buying if we stay up and we're kind of closer, less buying if we're already far away because there's not a lot to hedge because those are lower deltas already. Now, I didn't put this in this picture on purpose because I want to make it easier to kind of see where things are. But if we just change this a little bit and go 6,700, bam. So the 100Y gang, affectionately called in my server, sold 67.20, whatever these are, puts 20,000 of them. So we're not going 67.20. This also provides some kind of support should we get down in that area, but that's really far away. So right now it's not really doing anything. And this just kind of tricks the eye. But even with the trick of the eye, 6,800 matters. The 6,800 is going to matter if we get close to it, conditional path dependent. Let me just get rid of that so we can see what's going on. One more thing, I want to show you a different way to look at what's going on, and I'll turn it over. Let's go to depth view. So here we can see everything across expiry, right? So 6,800, big number. We have more 6,800 customers long puts for Wednesday. We have more we have 12,000 of them for the Friday AM expiry. We have some more of them here for 12/23 next week. So this number is going to continue to matter. It's going to be potential tailwind as we stay above, and charm and decay. Market makers have to buy back their short hedges for that if we isolate that by itself, and potential magnet if we head down. And could be both, depending on our path. We also have some stuff here for the 19th for Friday at 68.25, 68.20, kind of where we closed on Friday. This looks like a debit spread, 25.20. This is big enough, the 6,800, that if we're around here, we could slice right through it. Doesn't mean it has to, but it could. Down here, 67.80. Once we get down to that 20-day moving average area, looks okay. But again, should we break 67.50 all the way down to 6,700-ish, is where the next real level of support is. So these are your potential paths, and potentially we go nowhere also. Let me pull this back up. Let me remove my chart. And let's go to E-mini. And quick question. I hope you had a nice weekend. Let's cut to the chase.
Yeah.
Are you using the new contract or the old contract here?
Oh, good question. I forgot about the roll. This is still the old contract. I'll switch over tonight. It should still
and for those people that don't know, tell them what we're talking about.
So I believe it's every quarter, right?
Mm-hmm.
There's a contract roll on futures. I think the next one is ES. I'll tell you right now.
I think it's ESZ.
ESZ. Yep, you're right. No, we are on ESZ.
The March is, I can't see.
H.
Okay.
Yeah. So I'll probably roll over as soon as my rule is kind of as soon as the volume is bigger on the next contract. I haven't checked volume today. But if it's bigger on H, I'll switch over to H tonight. If not, I'll wait until H has more volume than Z. Okay, so right here off the bat, what I'm going to look for is whether we hold 68.57 first. I kind of think we might hold it right at open, push up above my ceiling, 68, and then have a reject. I'm kind of expecting a trap this way or a trap down and then up, but I definitely don't think we're going to stay in range today. My perspective is
how far down do you see that, if we have that deal?
If we have the bear trap, let's call it, I think we come down to 68.30. Okay. It will seem relatively aggressive, I think, and then find support, push back up. That's kind of my plan A for today. Obviously, I don't move the market, I just trade it. But if that does happen, I'll be very happy to load up longs in this area. Obviously, maybe I have the second area down here. That could be another area where we find that footing and push up. I don't think we'll go that low, but I like to set us up just in case. The floor that I have today is 68.30. My bounce zone is from basically 68.30 to 68.18. Anywhere in this area, I'll be looking for confirmation to the upside. Once we break above the target, I think we kind of stall out. Obviously, it's a big move back to 6,900, but I do think we kind of stall up around here.
What number? Where are you there? Oh, okay, the top of the range.
6,900.
Yeah.
Mind you, that's on this ESZ contract. I haven't done the switch over, but I'll do that switch tonight.
Yeah, and I think I looked before what the difference is. It's usually like 65. Let me see. I actually took out the 65. It's roughly 65-point difference between the SPX and the ES on the contract. And just for those of you, a very simple way of thinking of it is that's the time factor. That's 65 points of time until the March contract expires. So and then it gradually comes down to equal the SPX at like the moment of the roll, like this, the split second, whatever.
And I just looked, the roll is technically tonight at 6 p.m. So these levels and value should still be good to everybody. And by the official roll, I mean when the continuous contract, which is ES1, when that technically has that gap up or gap down based on the new contract.
Right. And sometimes there's funny business with the roll. A lot of times there's not. So just if you see something that doesn't make sense, maybe it's the roll and exhale for a minute.
Yeah.
What does it say? So what do you guys use to get overnight SPX? Okay. So in TradingView, let me show them. In TradingView, there's this wonderful thing called SPX. See, it says SPX SPX. So if you're in TradingView and you're typing the symbol search, type SPX, and a bunch of SPXs will come up. Let me just kind of randomly grab another one. I don't want to screw up what I have here. If I'm here, I type SPX, I get it. A whole bunch of them come up. SPX. I'm not even sure how I get it. SPX SPX. Where is it? Let's go. Yeah, now indices. Here we go. I'm not sure where at. Well, it's there somewhere. SPX SPX. Boy, we got all kinds of SPX index, SPX. Well, it says somewhere, SPX SPX. Somehow I found it. I don't want to lose it. SPX SPX. And there's another one that people use. I think it's SPX CFC or something. It's for the Euro people. But anyways, that's what I use.
There's one called SPY SPX ES price.
That should be it.
Yeah,
throw it on your chart, see if it does it.
And you have to tinker a little bit with the settings, but it's pretty straightforward. SPY SPX ES price converter. That's what official name.
Yeah, so that's
by PT Gambler. That's the username who published it. PT Gambler.
Is the right one? That doesn't look like the right. I guess that is the right one. Okay. Okay. So we did that. Let's talk about VIX. Oh, Vol Trader is here. I'm going to put Vol Trader up there too with us. We have a circus and three-ring circus. But before I put him on, let me just talk about VIX real quick. And I'm just sort of still thinking it through a little bit. And so we could kind of think together here. And let's just stay right here right now. Let's go VIX. And right now we're on the market maker's side of the table. So this is this week. This is expiring when Tuesday's the last trading day, Wednesday expiration, this goes bye-bye. And then this takes over. So what takes over, if this is correct, is basically pretty muted. Now, this looks different than the way I saw it over the weekend. I don't know if maybe the numbers were screwed up. So once all this goes away, we don't really have much required hedging here from the market makers to hedge this out, because not what I remember seeing over the weekend. Something's kind of funny. Customers are on call. I'm gonna have to do some more work on this, but this looks like VIX is scheduled to be muted, and that doesn't make a lot of sense. But what we have here is we have short puts at 18 customers, short puts at couple customers, short puts at 17. So I'm gonna have to do some work on this. Because this doesn't, we're not getting, here customers are long calls, and here that makes sense. Here over 19, if we get over, okay, let's just look at it this way. If we get over 19, customers are long calls, and we can run. That's VIX. Now, there's a lot of VIX ratio spreads coming in, like people buying, like selling an 18 VIX put or 17 and a half and buying two 15s and that kind of stuff, ratio spreads on top. They just make it kind of not as easy to interpret directly. So like I said, I'm gonna do some work on it. I'll get back to you guys on it. It's gonna take a little bit more work than a quick glance. I guess that's just the way it be, right? Let's get back to something nice and easy. Let's go back to SPX. And so that's it. So now I'm going to put Vol Trader on there, and as his name, where is he? As his name implies, he looks at Vol, and so maybe he can give us a little color on what he sees in the VIX space, even though he's much more about local Vol. Go ahead. What do you have to say for yourself? Good seeing you. You're muted. Okay, well, until he unmutes, let me see what else is, okay, let's talk about some of the other things that are coming up this week. Like I said, we have Alphabet Soup. We also have the QYLD roll. So as a reminder, we have the YLD family of funds. Let me look into the camera. We have the YLD family of funds, and a lot of yield max. A lot of folks use it, and they sell at the money covered calls on NDX, so the Qs, on SPX, on RUT, as well as on lots of individual names. They have NVDY, they sell it on Nvidia, they sell it on Amazon, on Coinbase, on MSTY, and all that stuff kind of provides positive gamma or liquidity to the market broadly. It's a different world than it was 3 years ago. That said, what we're really thinking about right now is on Thursday, the QYLD fund only, and only the QYLD fund, buys back the calls they sold last expiration. They sell it one expiration to the next. So on Friday, they'll be selling to the next AM, to the Jan AM expiration at the money. Today, rather on Thursday, they buy back the short calls. Tends to be supportive, doesn't mean it has to be, worth about 0.2 percentage points. So if we were going to be down 0.5%, we're only down 0.3%. If we're going to be up 0.2%, we're going to be up 0.4% ish. And the inverse on Friday, when they sell them, and on Friday they sell them not just in NDX, but they sell them in RUT, in SPX, in NVIDIA, and everybody. So that tends to have a suppressive effect. Doesn't mean we have to go down, tends to have a suppressive effect. And again, let's just take a quick peek. Where am I peeking? I'm peeking over here, I think. Let's take a quick peek and just see where the NDX calls are. This is Gamma Edge. While it's loading, something went wrong. Okay. There we go. It went right. Okay. That's good. I just using this because it's real easy to see these big numbers sticking out like a sore thumb. Just so we can see them real clearly. Where are they? Here they are. 4,000 calls deep in the money at 24.50 sold last month. These are going to be bought. I'll do some work on it, tell you what the deltas are and what the impact may or may not be. These 4,000 are being bought back on Thursday. This trade will happen. And on Friday, they'll be selling the at the money wherever we are at the time. And what I did I still have it? Let me see if I still have it. See it, maybe it's another account. What I did is I've been doing this for fun. I might have closed it already because it might have been pretty much what I did and what I've taken to doing. When that trade comes in, I want to see, I have volume. There's open interest here. When that trade comes in, I just bought that. Doesn't make sense. I bought that. It cost me about $4, $5 to make, to make a double, maybe a little bit more. I might have closed. I might have had it in like to sell at $9 instead of the $10 that it would be, because I don't want to sit there for $100 because I'll leave it there. I like getting out of trades. And so I'll be doing that again when they come in on Thursday. And that's really it. I have this VIX trade. I kind of mimic what the institutions did, doing a VIX. I didn't do a 1x2. I did kind of like a flyish looking thing, just for fun, just as a way to track it. And let's take a look at, I'm going to close this thing out soon. This is your standard-ish 112. Those a lot of you vol sellers know it. Buy a debit spread, sell two puts. This was done, I don't remember exactly when, but when the market was in the toilet. And this seemed like actually, I had rolled it down once. This part was profitable. So I took the profit and rolled it down again. But we're not going to talk about 112 trades right now. We're going to talk about a quick SPX. And so, today is going to be somewhat tricky because we have that big thing here at 6,800. And let's see. So I'm going to reverse engineer it somewhat. Let's start with a fly, actually. And we're going to work from, I'm going to work from there. Okay, that's not horrible. Move it down a little bit. 20 cents, that's cheap. If the world falls apart, we expect it to head towards 6,800. So now what I'm going to do here, I'm going to build some kind of Frankenstein. Okay. But I don't have the right. No, that sucks. Okay, that Frankenstein doesn't work. Oh, it's supposed to be a cell, that's why. There you go. I'm going to start off with a Frankenstein like this. Maybe even take one more away. Yeah, I'm going to start with a little Frankenstein like this. I might also layer in a second little fly here just to see what's going on here. And then I'll likely add in here 85, 95. I just want to have this little buffer here. You also do a broken wing fly. This is really a condor. Just want to have this here in case of trouble. On top, 69.10. There's still some juice there. 50 cents. That's not horrible. Should we go up? We had that 75-ish stall area. It's kind of expensive. So I'm going to put it in at 60 cents for now and come back and revisit it. And that's it. Vol Trader, you ready to speak? You have your mic fixed? We like trouble sometimes, right? I mean, really, you can probably, I'm probably going to sell those in size without that there, but we'll see, we have the systematic hedge funds that come in every day selling those puts. I expect them to show up today, knowing how these characters think, because they think like me. Somewhere between 68.10 and 67.95, which will then support things. Vol Trader, speak. Mike is off. Well, okay, we got all that. Okay. And I guess that's it. We can't get Vol Trader to speak because he can't turn his mic on. Unmute mic. I don't have him muted. Okay. You can't
All right.
unmute. Yes. Go ahead.
No, I was just gonna say good luck, everybody. Again, I'll be posting those chart updates throughout the day. If you have any questions, always feel free to DM me.
Okay. Take care, everybody.